My name is Darren Carlett, and I'm the Managing Director of Dual Edge Research. Dual Edge publishes 2 weekly newsletters. The first is a stock and option strategy, which is covered in the Bull Strangle newsletter. The second is a commodity futures spread strategy that is covered in the Smart Spreads newsletter. This video is dedicated to the Bull Strangle strategy and is the 4th and final video in a 4-part series. Okay, before we jump into the content of video 4, let me go through the strategy benefits and then the core elements. And recall from the first video, the benefits are really strong, rock solid stock picks. There's a documented 76% profit rate on the combination of the 3 legs of the trade that we do. We do have a proven investment strategy that returns greater than 2.4 times the S&P 500. In fact, that number is even higher than that. There are a number of different variations to the strategy that allows people with maybe less risk tolerance to do a little bit less risky strategies. And then this is a very low maintenance type of a strategy, which literally all the trades are placed on Monday, and then there's really nothing to do until the next Monday. Okay, the core elements. Number 1 is to pick quality stocks, and we have reviewed how we're looking for technically strong stocks using time-tested search engines that have criteria to ensure that the options meet our investment strategy. We are sellers of stock options, which gives us the obligation to sell a call if it hits a certain price, and the obligation to buy if it hits a certain price. The setup is buying 100 shares of stock, selling a call above and a put below. And generally, that's going to be in the 1.5% to 2% above and below is what we're looking for. We are using a weekly option cycle. And this is different than a lot of covered call strategies, but we're going to go have a 1/4 of our investment capital in on each individual cycle. We do have an element of looking at the market environment and backing off on our investment level in markets that aren't favorable. And then diversification is a key element across sectors, but also stock price and implied volatility. So the 4 video series has included these videos. The first one was mainly geared towards options and just making sure we have a good solid foundation for the strategy, which centers around stock options. Video 2 went through the strategy in detail, and then video 3 went through our risk rules. There's 6 of them, which included some strategy variations in case you want to take on a little bit less risk, and then the market environment, which helps to determine the investment level. And then I'll review the contents of this video on the next slide. This 4th video is broken down into 4 parts. And all of these are really the, call it an outline of the newsletter itself, and is in the same sequence. The first section is about the market recap, and we get into the weekly market action. We go through an economic calendar, and then we have then a technical analysis of the S&P 500, and then the market sector summary. The next section is our open trades updates. So I'll go through what are the current holdings in my personal account, which is broken up by the various sectors so that you can see the diversification. There's a summary of the open trade profit and loss. And then there are charts, 2-hour charts for each of the trades that are currently open. And that's always going to be 3 weeks worth of stocks, usually 15 total for me in the open trade update. The next section is about the watch list candidates for the next trading week, which the newsletter comes out on Sunday, and it's for trading the very next day on Monday. And the watch list includes, the various stocks, the price, the implied volatility, the open interest, and the sectors. I get down into option strikes and prices. And then I break it down to what I call the short list. So these are the stocks that I'm more than likely going to trade. There's usually 10 of them or so, and 5 of those I'm planning to trade. And then I do key in on 2 of what I call watch list favorites. And I have traded these 2 stocks literally every time I have published a newsletter. So at least 2 of the 5 are absolutely, I wouldn't say absolutely, but generally known. And then finally, we end with the performance summary. So we'll go through all the recently closed trades, which is going to be 4 weeks worth or 20 trades recent. I'll go through the variations compared to the S&P, and then we'll look at watch list performance and watch list metrics. I mentioned previously, every trade on the watch list is tracked and included in the newsletter after it expires. So, and then there's a long-term tracking I've been doing since mid-May, which shows how each week the watch list has compared to the S&P 500. Okay, the first section is the stock market recap. Okay, this section starts off with a narrative recap of the market action from the previous week. And in this section, we're going to talk about kind of how the various indexes performed. We'll talk about some of the key drivers behind, what the market action and what really drove it. There's usually a section on what's looking ahead, and then there's a summary. So this is just an overall look at really what drove the market from the previous week. Also included in this section is the economic calendar. And this is something that I pull off of Bloomberg every week, and I'm looking at just the U.S., United States, and looking at any kind of major events, announcements for the next week. Next in this section is an overview of the S&P 500. I always include a weekly chart with some commentary listed. For this week, the market was down 2.4%, and largely from a pretty big drop on Friday. But you can see how the market has performed over the past couple of years by looking at this chart and where we stand currently. Next is the market environment, and I went over this in detail in one of the earlier videos, but we're breaking down the market into either a red, yellow, or green. It's green the vast majority of the time, and we're going to be 75% invested during those times, and then we're going to back off when we are not in the green. And this is always going to be looking at those 3 simple moving averages and kind of how they align with each other. In this particular example, we do have the most bullish formation, which is green on top, or the 50-day on top and the 200-day on bottom. So this would suggest that you should be what I call fully invested, or at the 75% level. Next is a summary of the various sectors and how they performed the previous week. There are 11 sectors that I track, and then of course the overall broader market. And this is sorted by the 5-day percent change. And for a positive week, I'm going to kind of do it high to low, and for a negative week, I'm going to do it low to high. So that's what we see here. And finally, in this section is a 1-year chart for each of those sectors in the same sequence as the previous slide. This is just the first 6, but I would have 2 pages of this and the 12 different charts to show. The next section in the newsletter is the open trade updates. One thing that I've mentioned a couple times in these videos is I'm very big on tracking performance, and I want to be very open and honest with exactly how the trades I've recommended are performing. And specifically on the open trade update, these are the stocks that I have chosen and am trading in my personal account. So these are based off of actual fill prices. So this page shows my current holdings as of the newsletter publication. There's just the 3 weeks because I'm going to open up the next week, the next day. So you can see here that there's a total of 15 trades. I'm doing 5 a week, and I very much have stuck to that number week after week. You can see the various stocks that I am holding and the sectors that they belong to. When I start to put this together or start to pick my stocks for the next week, this is where I start. And of course, I would be looking to fill in the gaps. So on this list, you see the different sectors, but what you don't see is real estate, and you don't see utilities, and let's see, you don't see healthcare on there. So I don't have any of those. So I'm going to be looking at the watch list specifically to find stocks that are in those 3 categories kind of as my first picks. And then I might look to go find a consumer staple because I only have one of those, and then materials because I only have one of those. So that's kind of how I use this to kind of pick my stocks. Staying diversified is a huge part of the strategy and something I spend quite a bit of energy against. Also listed, you see on the bottom, is any protective puts that I might have. For my portfolio, I could protect my entire portfolio by buying a put every week, but I don't ever do that. So I'm partially covering it. And in fact, I've been doing this for a couple months. I haven't made $1 on any of these protective puts. So it's buying insurance, which of course, many times you do not need. This next page shows all the different data that I use when I am presenting both the open trades, recently closed trades, and the watch list performance from the last expiration. I'm not going to go through this in detail, but as you can see, this does describe pretty much every column that's on there, and you can kind of see exactly how I'm pulling the data and what it represents. Next is the open trade summary. So a couple slides ago, I showed you the 15 stocks that I was holding. The point of that slide was to show my diversification. Here, I'm looking at the performance, and I'm looking at it across every different variation to the strategy. So we talked about this in a previous video, but I break it down, try to make it as simple as possible, right? So I'm looking at the stock profit, the covered call profit, the naked put profit, and then the purchase put profit. And literally you just add these together to kind of come up with the various strategies. As an example, covered call naked put would literally be taking the green, blue, and yellow and just adding them together to come up with the profit for that strategy. And you can see how that builds across for the other variations to the strategy. So the final part of the open trade summary is charts for the 15 current holdings. And I represent these in 2-hour charts. The great thing about a 2-hour is that it would actually cover the entire period that I'm holding it once you get to the final week. I'm also marking exactly what the call and put strikes are on there. So it's a real quick and dirty way of seeing kind of how the stocks that I am currently holding are performing. The next section is the watch list. And this is actually the most important part of the newsletter because it gives you the list of candidates for the next trading week, which of course would be the next day because this comes out on Sunday and then you're going to place your trades on Monday. I do break it down into a variety of different types of information, but typically there's going to be 20 stocks on the list, or plus or minus a couple, that will be on the watch list. Okay, here is the watch list for this particular week. This would be for entry on August the 11th. That's a Monday, of course, for expiration 4 Fridays later on September the 5th. I will sort this by sector, because that's how I like to look at it myself personally, and I imagine my subscribers do as well. One thing that I've noticed as I've been doing this for so long is that there's always several consumer discretionary trades out there, as well as technology. There's, I many times I start off with 8 or 10 of these and have to whittle it down to, 2 or 3 or 4. The ones that are harder to see are real estate and utilities, and healthcare. Those are the ones that show up the least often, and you'll see that those 3 are on this watch list. So as I'm planning my trades for the next week, I'm generally going to be jumping into those 3 sectors because they don't show up every week on the watch list. But you can see that this is broken down. It's got the company, the last price, the implied volatility, the open interest, and then some of the industry sector and the subsector information. You also notice that every one of these, of course, has weekly options because this is for the September 5 expiration, which of course would only be for the weekly options. And then there is the earnings. And of course, we would not want to see any of these reporting earnings during that 4-week period of time. This next slide is the same watch list candidates, but with the option prices. Now, a couple points on this. This is all based off of the previous Friday's close. I'm using the bid on both the call and the put, and then the ask on the protective put. So these are actually very conservative estimates. Typically, if you see a spread of, say, from $1 to $1.20 on the bid ask, you can expect to get into that for like 105, maybe even 110. But this basically takes it at the dollar, or the most conservative estimate on how much premium you're going to receive. But the other point on this is that, because this is based off the Friday close, these stocks are going to open up the next Monday morning, and they're going to be trading at a little bit different price than what you have here. And many times you need to adjust the call or the strike, or the call or the put strikes based off the current market action. So I'm actually looking to keep my call and my put distance from the current price at about the same distance on both sides. And I'm generally going to be between 1.5% and 2% above and below the price. So don't get so wrapped up in the strikes that I have listed here, because if it opens up, take the first one here, the Arbor Realty, it might open up at $13. And of course, that would change the strikes that you would want to use. Next is what I call the short list. Okay, so on the previous slide, I have generally about 20 stocks that meet the criteria, and this is a broader list that subscribers would want to choose from. But here are the 10 that I'm really going to be focused on for the next trading day, and you can see that they're listed by sector. So, in this case, I would either purchase Dutch Brothers or Capri Holdings. I'm not going to do both, of course, because they're in the same sector. I want 2 choices to kind of do the one. You see I've got 2 financials there. I would obviously choose one of those. And then there's just one healthcare, and there's one real estate, and there's one utility. I'm very likely going to get into those 3 stocks for sure. So even though you can't tell exactly what I'm going to do by looking at this, you can kind of, if you think the way, and how I'm thinking about it, you can figure out what I'm planning to go do just based off of my current holdings and what's on the short list. The next thing that I cover is 2 what I call watch list favorites. Now, I call them favorites, but that doesn't necessarily mean that they are the best choices for the week. These are almost always ones I'm going to do for the next week. This particular one is Oscar Health. The reason I like it, it meets all the criteria, of course, but it's in the healthcare sector, and I didn't have any exposure to that sector. So this is a trade on Monday morning I'm very likely going to go do. And I say very likely. So far, I've done it every time I publish a newsletter. So I'm at 100%. There might be a reason that I wouldn't trade it, based off the market action, right? If it gaps up or gaps down, or there's some crazy news event that might deter me. But generally speaking, I'm getting in these stocks that are in this watch list favorites section. So this just kind of provides a little bit about the company on the left, and then on the right, you can see the upcoming earnings events and some past events. I also include a chart for each of the two watch list favorites, and then some kind of narrative about kind of why I like it. One thing about this is that, you'll see the kind of a very reoccurring themes. And I mentioned this in the stock picking video. I like to see stocks with strong support. And in this particular example here, we see that this stock announced earnings and jumped over their declining trend line. And it closed that Friday above 3 of the 4 simple moving averages. And you'll notice that all 3 that are below it are pretty close below it. So I view this as having very strong support. And I found that stocks with this kind of a setup tend to do very well for the strategy. And then finally, for some additional detail on the watch list favorites. So again, this is the Oscar Health. I'm showing kind of how the covered call naked put is constructed. I'm assuming always 100 shares. Obviously, you would take this at the various increments. For this particular one, I would probably be buying 500 or 600 shares. So obviously, you just multiply that out. You can see that the max gain on this trade is very healthy. It's 33.2%. Of course, you have unlimited loss potential. And then I've got a range of values in terms of what the profit or loss would be under each of those different scenarios. So I've got that for the covered call naked put, and then I've also got it for the covered call with the put credit spread, and then I've got the profit and loss diagram for each of those. Okay, the last section of the newsletter goes through our past performance summary. So these would all be closed trades. I do it, and again, cover it by the various different variations. And then I also have started to do the watch list performance. So I'm tracking the performance of every stock on the watch list from the newsletter. Okay, we start the performance review with the recently closed trades. I'm going to go back 4 cycles on here. And of course, as I've mentioned, I'm doing 5 stocks per cycle. So there's 20 stocks on this list. And I'm showing exactly how I did. This is based off of actual fill prices in my personal account. Now, I don't do the put credit spread. So the red column is modeled. It's an estimate on what I think that price would have been. And, I think it's pretty accurate. It's certainly not exact, but the green, blue, and yellow are actual fill prices. Now, I described this in an earlier video, but I think it bears repeating. There is 2 scenarios where the accounting that I use in the newsletter might vary from what people would normally think. The first scenario is when the stock closes above the covered call strike price. And the goal here would be to ensure that the entire stock gain is assigned to the stock versus capping it at the strike price. So the example here is that I bought a stock at $50. I sold a call at the $55 strike, and then it closes at 60. Now, the reality is I only gained $5 on that stock trade because it got capped at 55, but I want to show the entire $10 gain and assign it to the stock, because now I can track how my stocks perform versus the S&P. And in this case, I take, in effect, that capped loss, if you will, off of the call. Okay, so the example here is I sold it for $3. It closed $5 above the strike. So, I lose the 500 from the 300 that I, sold it for a total loss on just the call itself at $200. So we come up with a total profit on this, the stock and the call of $800. But instead of capping it at 500 and then calling it 300 to get to the 800, we're calling it 1,000 and negative 200 to get to the 800. And that is a much better way of looking at it so that I can get a good comparison. And then the same basically holds true for the purchased put. If the stock drops below the cost or below the strike of the purchased put, I want to assign the savings, if you will, on that purchased put to the purchased put. And again, this just ensures that we're assigning profits and losses to the appropriate parts of the trade. This next slide shows how each of the different variations have performed compared to the S&P 500. You can see on the top left, the covered called naked put has returned over 72% since inception, compared to a little under 28% for the S&P 500. And you can see how that works across all the various variations. Note on the bottom left, the stock-only ROI is 66 and change, and not far behind the covered called naked put, which really shows kind of how strong the stock picking has been. In the middle bottom is a table that shows a little bit of extra detail. The one thing I want to kind of point out is the expiration group win percentage. That would be looking at all the stocks that were traded for that week as a whole. So, for example, on the cover called naked put, note that the individual trade win percent is 74%, but when you look at it across the expiration group, it's higher because we do get a little bit of favorability by looking at the group versus the individual stock. So 79% of the weeks is a gaining. Okay, next we have the performance of the entire watch list. And this would have been for the expiration on August the 8th. So here, I think there's 19 here. I have to count them, but it's always pretty close to 20. I've highlighted the 5 that I actually traded. And then I track, how the total watch list did, in this case, 2.3%, and that's across the whole 4 weeks. My actual trades were a negative 2.2%, so I didn't actually choose the best ones on the list for that particular week. And the S&P did 1% for the week. So, the total watch list did, almost 2.3 times better than the S&P 500. Now, another key point on here is if you go to the far right and you kind of look at the performance in total, even though my stocks were down 2.2%, I actually gained 2.8% once you factor in the calls and puts option premium that I sold. So, and this is a pretty good example on how, you get that extra leverage with those options. Even though my stocks went down, I actually still had a decent, this is not a great week, but I had a decent return for the week. But also notice the total watch list did 5.2% versus the S&P at 1%. I mean, that's 5x, right? And this wasn't even the best week, as you'll see on the next slide. Okay, the final page in the newsletter is more of a historical view of the watch list performance. And I summarize, May and June, but, by month, and then I've got the last several weeks listed independently. You can see up through the end of July, the watch list was almost at double digits, very routinely. In fact, at the end of July, I think that average was about 10% for the whole period covered. August 1st expiration was 3.8%, and then August 8th was 2.6%. Now, this is a pure percent improvement versus looking at it in the increments that we saw on the previous slide. So there's a little bit of a difference in the numbers because this is just averaging all the averages versus forcing it to an increment. But anyway, over the entire period of time, this is the watch list candidates have now returned 9%. And that's just the stock all by itself, does not include any of the option premium at all. And then if you look at and of course it's broken down by all the different sectors. And then if you look at the stock gain percent, this is the win percent. 73% of the stocks closed higher, at the end of the 4 weeks. So comparing this to the S&P is really the key thing here. And this has been consistently outperforming. In fact, I haven't had a week in any of the weeks that I've been tracking where the S&P performed better than the average of the watch list. I'm sure there will be times when the S&P does beat the watch list, but so far there's a period of, 15 weeks here, or I guess it's 12 weeks, that the watch list has outperformed the S&P each and every time. To summarize this video, the newsletter is broken down into 4 sections, starting off with a market recap. Then there is an open trade update, and there is the most important part of the newsletter is the watch list, which has up to or around 20 candidates each week. And then it concludes with a performance summary. Dual Edge Research offers 2 powerful newsletters with one simple deal. This video has been about the Bull Strangle stock and option newsletter, but we also offer the Smart Spreads commodity futures newsletters. You can get both newsletters for the low price of $49 per month, with deep discounts available for 3-month, 6-month, and annual subscriptions. The annual subscription is a 35% discount, and for a limited time, you can get your first month for just $1 by using the coupon code on the website. Go to bullstrangle.com/products to purchase.